Hey, JJ here with the Out of Value. All right, today another brutal day in the stock market. I'm going to go through some stocks again because I think this is historic. This is a historic time, and I like to document it, and it's fascinating, even though it's also painful for those who have some of these stocks just being devastated, including me for some of them. So what happened was during the market, stock losses accelerate into the close after inflation comes in hotter than expected is the headline. US stocks dropped sharply Wednesday afternoon as investors digested a key report on the state of inflation in the US, which came in hotter than expected across most major metrics. The CPI rose 8.3 in April over last year, coming down only marginally from March's 8.5. So I think people were wanting a decrease, maybe even expecting a decrease. It was a little bit of a decrease, but not very much. That had been the fastest rate in 40 years. So the last month has been fastest, and it hasn't come down very much. Consensus economists were expecting an 8.1% increase in April. So it's a little bit hotter than they were expecting, and that just the market kind of, I'm not going to say collapsed, but we'll see what's going, and certainly in some stocks, they just can't seem to find a bottom. So this one thing that I saw was the short term, this is a guy that, from a contributor to CNBC, a humble Tom Lee from Fundstrat chats live on CNBC Overtime. So I said that short-term predictors of market direction that financial media encourages are having a very tough time of it lately. So yeah, the financial media likes these short-term predictors of the market, which is impossible. It's impossible to predict the market. We all know that. Well, some people think that they can. And so this guy in particular has been kind of a perma bull for the last few years, and it's been going well because it's been just a bull market. We could say the end of a bull market, and and crypto as well, just been sort of a perma bull and everything. And he's been finding it tough lately. Let's just see the beginning of this because it's interesting.
The year. He is CNBC contributor Tom Lee from Fundstrat. He joins us now.
Oh, I'm sorry. That's too fast. Normal speed. Here we go.
9. Welcome back.
Hey, Scott.
We got to stop meeting like this. I mean, honestly, you keep telling me things are going to be all right, Tom, and then the market doesn't do what you say it's going to do. I mean, I don't know what to make of it.
It's painful. I mean, I'd say anybody who owns stocks today feels like they're caught in like a vortex of downward misery. And I'm sure a lot of people are questioning their own sanity. I think Josh made some good points even about a stock like Disney.
Oh, I mean, it's funny, but it's also painful to watch, right? I'm not going to go on with that, but have a look at it if you want. Yeah, questioning sanity and what was it, a vortex of whatever. Okay, so this is also interesting, just a tweet before I go on, is that from Ramp Capital on Twitter, funny account. It's an interesting market question. Yesterday, looking back, what was the most obvious sign of the top? And if you look at that tweet, there are lots of good answers to that. And these things seem obvious in hindsight. There were so many signposts along the way. But people going through this the first time who went around in the .com bubble, I said on the internet this morning that in 10 or 20 years, when the next one comes along, people who are going around this for the first time will see it better the next time, I think. If there is a next time, of course there'll be a next time. It's a question of when that would be. And the Nasdaq's now down over 29% for the year to date. I think it's I wouldn't be surprised if it round trips back to pre-pandemic even, when the bubble kind of in tech stocks took off, I think. So if we look at it, I think this is what I said this morning. I think this is perhaps the most significant move down today, one of the most stable of giant techs taking a 5% hit. So that's Apple. So it was over 5% down today. So, Jeremy Grantham was talking about the innovation tech, the smaller tech, emerging tech being hit first, which started last February, and then the generals being shot last. Are we seeing that now? And how much will it be? I don't know, but there's some, like we think of Meta and Netflix and even Amazon and, even Apple's now heading down, but we'll see. So, over 5% today. Apple also year to date down now nearly 20%, 19.5% now for year to date. ARK, this is where I'm going to go through some stocks. I think this is a historic time, and this was a bubble, and it's now bursting. This is ARK, so ARK typifies it. It was during the boom. It was a focus of the boom, and now it's the focus, kind of one of the focuses of the bust. So we're we're back to late November 2017. The ARK prices. So, and if you look at the graph, you can see on video, on YouTube, or on Spotify video, it looks, wow, just like a classic bubble and bust. And this, people are hoping that it'll bounce back. They've had net inflows for the year as of a few days ago, but I just wonder if that will change to outflows and what might happen there. People are still buying, but I would not touch this. I have a few of the same stocks as them, but I would not go near this. That's not financial advice, just my personal opinion. I don't know what happens to an ETF when there are lots of outflows and there's been a bust like this. What can happen? If it's a fund, then they can kind of go out of business. But what could happen? I don't know. But it's fascinating to see, and this is, as I said, an historic time. Tesla down 8.25% today, heading down. Tesla shareholders, the bullish or the all-in Tesla folks, don't think that this could ever, that it could go down 50% or more, but I do think that, and probably maybe it won't, but it's on the way there. I think it's more than 40% down now. It's 734. The past year it's still up 24.4%, so that's a good performance, compared to ARK, which Tesla's still their biggest in there, I think. So imagine if Tesla goes down, it gets cut in half. What will happen to ARK? Netflix down 6.35 today, continuing down. It just doesn't seem to find a bottom. The chart of Netflix, if you pull back, is incredible. The sharp drop has just been like a total crash. And 72% down Netflix from year to date. Wow. And there it is. There's a Netflix chart. If you can see it on screen, if you go back to the prices back to 2017, almost mid 2017, August 2017, and if you pull back on the chart, it's just an absolute straight down parabolic crash. Do you call it parabolic when it's going down? Like parabolas don't resolve sideways. But it's just a up and bam down. Incredible stuff. And NVDA 20.87% in the past year, up but down 50% in the since late November. So even NVIDIA, so people thought that one of the stocks that could they make, it's sort of like hardware rather than software, but still nothing in tech is safe at the moment. Shopify down another 5% today. Can't find a bottom, down 76% year to date. Amazon 119% over the past 5 years, which and we're going back to 4.7% from 2018. So this hasn't moved much since August 2018. Even Amazon. Unity Software down 37%. I talked about this yesterday, that it was heading for this today, and it happened. 37% down, and now pretty much 85% down from the peak. Incredible stuff. And Coinbase down 26.4% today. Wow, these are just incredible moves, and 84% down from the peak. Oh wait, yeah, 84% down from the peak in mid-November, early November, to an all-time low Coinbase. Their results were not great. And Block Square was down, I think, in sympathy, 15%. This is one that I've been buying, bought too early. It could go down a lot more, but it's not a huge position. But I still like it, and we'll see what happens there. It could go down. I mean, given what's happened to Coinbase and how it's kind of joined it, Block's kind of joined at the hip with what's happening with Bitcoin now, because some part of its revenues hitched to that, and well, it could go. Wouldn't be surprised if it goes down at 71 now, after being, from August 2021, it's down 74%, and at 450 all time. Spotify down 62% from year to date, and yep. And Fiverr down 25% today, and it's kind of all-time lows. And Upwork and Sympathy down 12, nearly 13% today, 25%. 73% since the peak. So it just goes on and on and on. Palantir down another 8% today, 27%. All time down 27%, down 80% from the peak. These are it's just incredible what's going on. RIVN, of course, expecting that to take a big dive it still seems expensive considering what they are actually producing. 84% down from all time. It's just crashing. And AMC, 82% down from the high. It's still expensive. It's still fairly expensive though. How it can go down more, I think. This is just not advice, it's just my thoughts. AMC was down over 12, nearly 12.5% today again. Still waiting for that mother of all short squeezes, people in there. But maybe people will learn from next time. I think. I'm being pretty harsh here, but I think this is just it was a boom and bust. We'll be talking about this for decades. We will be talking about this for decades. What's happening right now? What's happened in the last couple of years? Peloton down 92% now. 92 was a retail favorite. It was a favorite. The kind of Apple of fitness, down 92%. Incredible stuff. So that's all I've got for you today. As I said, I can't say it enough. This is historic now, and it's just incredible what's going on. So, yep. How long will this go on for? These stocks can't find a bottom, and the indices are starting to go down now. Like the generals are being shot, as they say, and but they're strong. So it's just a question of how irrational to the downside the market gets on the way down. Not saying it's even irrational now. The S&P is not even in bear market yet, but the Nasdaq is fully in bear market. So that's all for today. Like and subscribe on YouTube, and subscribe on Spotify, and audio everywhere else, and see you next time.